Hello and welcome to today's video on investing in China. China is the world's second largest economy and has been growing at an impressive rate for the last few decades. In this video, we will take a closer look at why investing in China is a great opportunity for investors, the current state of the Chinese economy, and some of the most promising sectors for investment. Section 1. Why invest in China? China's economy is growing at an impressive rate and has been for some time. The country has a large population and a growing middle class, which means there is a huge market for products and services. Additionally, China has been investing heavily in infrastructure, technology, and innovation, which has created opportunities for growth and development. For example, China is home to some of the world's largest technology companies, such as Alibaba, Tencent, and Huawei. These companies have been expanding rapidly and are expected to continue to do so in the future. Section 2. The current state of the Chinese economy. China's economy has been growing at an impressive rate for the last few decades. However, the country has faced some challenges in recent years, such as the trade war with the United States and the COVID-19 pandemic. Despite these challenges, China's economy has remained resilient, and the country has continued to grow. In fact, China is expected to be the only major economy to see positive growth in 2020. Section 3. Promising sectors for investment. There are several sectors in China that are particularly promising for investment. One of these is technology. As mentioned earlier, China is home to some of the world's largest technology companies, and the sector is expected to continue to grow rapidly. Another promising sector is healthcare. China's aging population and growing middle class have created a huge demand for healthcare products and services. Additionally, China is investing heavily in renewable energy, which is also a promising sector for investment. Section 4. Risks and challenges. Of course, investing in China does come with some risks and challenges. One risk is political instability. China is a one-party state, and there is always the possibility of political unrest. Additionally, there are concerns about the country's human rights record and its treatment of minority groups. Another challenge is the language barrier. Many investors may find it difficult to navigate the Chinese market without a good understanding of the language and culture. Certainly, here are some additional details and insights on investing in China. Number 1. Market access. Although China offers a large and growing consumer market, foreign investors may face several barriers when entering the Chinese market. For example, there are restrictions on foreign ownership in certain industries, and there are regulatory challenges when it comes to intellectual property rights. Additionally, the Chinese market can be highly competitive, and it may be difficult for foreign companies to compete with local firms. That being said, China has been making efforts to open up its economy to foreign investment, and there are now more opportunities for foreign investors than ever before. Number 2. Economic policies. China's economic policies can be complex and difficult to navigate. For example, the country's currency, the yuan, is managed by the government, which can impact the value of investments. Additionally, China's economy is heavily influenced by government policies, and changes in these policies can have a significant impact on specific sectors or industries. It's crucial for investors to stay up to date on the latest economic policies in China in order to make informed investment decisions. Number 3. Cultural differences. Doing business in China can be challenging due to cultural differences. For example, Business relationships in China are often built on personal connections, or guanxi, which can be difficult for foreign investors to establish. Additionally, communication styles may differ, and it's important to understand the cultural norms when conducting business in China. Foreign investors may want to consider hiring a local consultant or partner to help navigate these cultural differences. Number 4. Political risks. As mentioned earlier, political instability is a risk when investing in China. The Chinese government has a significant amount of control over the economy, and changes in government policies or leadership can have a major impact on investments. Additionally, there are concerns about human rights violations and the treatment of minority groups in China, which could lead to political or social unrest. Number 5. Investment options. There are several ways for investors to gain exposure to the Chinese market. One option is to invest in Chinese companies listed on global stock exchanges such as the New York Stock Exchange (NYSE) or the Hong Kong Stock Exchange (HKX). Another option is to invest in exchange-traded funds (ETFs) that track Chinese stocks or indexes, such as the MSCI China Index. Finally, investors can also invest directly in Chinese companies through joint ventures or partnerships. Trade tensions. Trade tensions between the U.S. and China have been a major concern for investors in recent years. The two countries have engaged in a trade war, imposing tariffs on each other's goods, which has created uncertainty and volatility in the global markets. Although the two countries signed a Phase 1 trade deal in early 2020, trade tensions remain a risk for investors. Innovation and technology. China has been investing heavily in innovation and technology, and this has created opportunities for investors in sectors such as artificial intelligence, robotics, and biotechnology. Chinese companies are also increasingly filing patents and developing new technologies, which could lead to significant growth opportunities in the future. Environmental and social factors. China has faced criticism for its environmental record, and the government has been taking steps to address this issue. The country has set ambitious targets for renewable energy, and there are opportunities for investors in sectors such as wind and solar power. Additionally, China's growing middle class is becoming more socially conscious, which could create opportunities for companies that prioritize sustainability and social responsibility. Currency risks. Investors in China face currency risks, as the value of the yuan can be volatile. In addition, the Chinese government has been taking steps to internationalize the yuan, which could impact its value compared to other currencies. Investors should be aware of these risks and consider hedging strategies to manage currency risk. Regulatory environment. The regulatory environment in China can be complex and rapidly changing, and investors may face challenges in navigating the rules and regulations. For example, the Chinese government has been cracking down on certain industries, such as online lending and ride-hailing, which could impact investors in those sectors. Additionally, the Chinese government has been increasing its scrutiny of foreign companies, which could create additional challenges for foreign investors. In conclusion, investing in China is a great opportunity for investors. The country's growing economy, large population, and expanding middle class make it an attractive market for products and services. Additionally, there are several promising sectors for investment, such as technology, healthcare, and renewable energy. However, investing in China does come with some risks and challenges, such as political instability and language barriers. As with any investment, it's important to do your research and understand the risks before making a decision. Investing in China can offer attractive opportunities for investors, but it also comes with significant risks and challenges. It's important for investors to do their due diligence, understand the risks, and stay up to date on the latest economic and political developments in China. By doing so, investors can potentially reap the rewards of this growing market. Thanks for watching.